But what really happened during the dot-com bubble burst? The Nasdaq Composite Stock Market Index rose by 600% between 1995 and 2000, a staggering increase that would eventually lead to a catastrophic collapse. As the bubble grew, telecommunications equipment companies invested more than $500 billion in laying fiber optic cable, adding new switches, and building wireless networks. This frenzy of spending would eventually lead to a devastating crash. Meanwhile, the news media took advantage of the public's desire to invest in the stock market, fueling the frenzy with promises of easy profits. But as the bubble grew, the reality of the situation became increasingly dire. The growth over profits mentality led some companies to engage in lavish spending on elaborate business facilities and luxury vacations for employees. But this excess would eventually prove to be a fatal flaw. As the bubble reached its peak on March 10, 2000, the Nasdaq Composite Stock Market Index peaked at 5,048.62. But this was only the beginning of the end. The first signs of trouble appeared on March 13, 2000, when the Nasdaq fell 2.6% despite the S&P 500 rising 2.4%. But investors remained optimistic, and the bubble continued to grow. However, the writing was on the wall. By April 3, 2000, Microsoft's value had dropped 15% and the Nasdaq had dropped 350 points, or 8%. The bubble was starting to burst. The first major casualty of the crash was Pets.com, which went out of business on November 9, 2000. But it was just the beginning of a long and painful process. By the end of 2002, the stock market had lost $5 trillion in market capitalization since the peak. The dot-com bubble had burst, and the reality of the situation was finally clear. But what lessons can be learned from this catastrophic event? The most valuable public companies are now generally in the technology sector, and the growth over profits mentality has been replaced by a more cautious approach. Fred Wilson, a prominent venture capitalist, lost 90% of his net worth when the bubble burst. But he has since recovered and continues to invest in the tech sector. The dot-com bubble led to the creation of a high-throughput backbone for the internet, software, databases, and server structure. But it also left a trail of destruction in its wake. In the end, the dot-com bubble burst was a cautionary tale about the dangers of unchecked enthusiasm and the importance of caution in the face of uncertainty. So what really happened during the dot-com bubble burst? The answer is complex and multifaceted, but one thing is clear: the consequences of the bubble's collapse were far-reaching and devastating. The dot-com bubble burst was a turning point in the history of the stock market, and its lessons continue to be felt today.